Okay, I suggest we get started. So welcome everybody to our webinar on how to be an active angel investor. It's my pleasure to do an interview with two angel investors today. And before I do that, I'm going to tell you a few things about what SICTIC is. So as you know, my name is Dübendorfer. I'm the president and co-founder of SICTIC. And today I'll be just the moderator of this session. And so what is SICTIC? We are actually a community of investors, and our mission is to connect Swiss early stage deep tech startups with smart money investors. So people come to us that have a great idea with their startup, and they look for people that can bring them more than just the money. They also look for people that give them connections to customers, give them guidance and more. And we currently have a community of about 500 active investors, and with that we by far the largest angel investor network in Switzerland, and we have a presence not just in the German-speaking part, but also in Romandy, in the French-speaking part, and in Ticino, in the Italian-speaking part. If you look at the numbers by end of 2021, there were 110 financing rounds facilitated through SICTIC as an organization. Looking at a total number of reported rounds in Switzerland, which was 156, our people were involved in 71% of all early stage tech investments in Switzerland in 2021. So that's quite a fascinating number. It basically means that our community is active across all startups that look for money with very few exceptions. Then looking at our portfolio, which is basically the companies that our angel investors have stakes in because they put money in and got some shares. We have currently about 200. This is by end of 2021. It will be more by end of this year, but these statistics are still coming out. And out of these 200, the biggest chunk is fintech startups, about 18%. We also have a lot of internet platforms like marketplaces and so on, or artificial intelligence and machine learning startups with 7% is quite popular, and also health tech. So doing something with data for making the life of people better. And the other is lots of different things, robotics, drones, cybersecurity, advertising, marketing tech, prop tech startups, almost everything you can imagine. We also had some exits in 2021, and our investors, of course, if they have an exit, many of them, they take the money that they earned and put it into new startups. That's great for the ecosystem, and it's great for the founders, and of course also great and necessary for investors. Yes, looking at our population of investors, by end of 2021, we had 502 active accounts, out of which 55 were female investors and 447 were male investors. And we have a large group, of course, in a German-speaking part of Switzerland, which is also, of all of Switzerland, the region with the biggest population of all Swiss people. But we still have 15% in the French-speaking part, and some in Italian, and a few international ones. So SICTIC allows investors from abroad, but we do invest only in startups which have the domicile in Switzerland. Yes, and looking at the follow-up investments that our portfolio companies have acquired by mostly venture capitalists, so the 200 that you have seen, in total, they got follow-up funding of 1.4 billion Swiss francs, which is quite significant, and they have created more than 4,000 jobs. We're also very active as an organization. We had 60 different events. Many of them were events for educating investors or networking investors, and of course also all our pitching events. So we had a total of 60 events in 2021. Now, how does this work? If you want to invest with SICTIC, basically you come to Investor Day. There you see the startups on stage. They quickly pitch what they want to do, and then you have the time to meet them at the apéro or do Q&A with them. And once you really want to learn more because you like the idea, like the founder team, then you can meet them again. And this is facilitated by SICTIC. We call it the deep dive session. It's typically about a week after the event. And there you get to know the full team, you get to know the product and your other co-investors which are interested. And at that meeting, you decide if you want to meet them again and go really deep, like do due diligence, look at the agreements they have, do tech and legal due diligence, and also look at the business case in more detail. And that's then the second follow-up meeting that we facilitate, called the due diligence kickoff. And in that meeting, typically one of the investors steps up and becomes a primus inter pares, which basically means that he coordinates the other investors such that it's an easier way for founders to talk to a group of investors. And after that, basically that lead investor or deal coordinator takes on the responsibility to move the deal to a term sheet and ultimately to close the round. So that's the process that we do. And we have about 10 of these investors event every year, where you can see between 80 and 100 new startups. Yes, so that was how it worked. Now, of course, because it's Christmas time, we do have prepared a little Christmas special for all of you. Right now, we have 57 participants in this meeting. So thanks everybody for joining, despite all the other things going on just before Christmas. So if you're not yet a SICTIC investor, but want to become one, or you have a friend that might want to join us, we have a very special discount if you join before December 25th. Just scan this QR code, go to our investor website, and there use the promo code ANGELWebinar. And so for next year, would have half the price. So yeah, you can try it out. We hope you like it, of course. And yeah, let's now dive into what we have. Coming up next year, we have an event actually for new investors to be onboarded. Then we have a cool one in the ski area of Lux. It's the same weekend where the Lux Open take place. So in the morning you see pitches, in the afternoon you see people doing crazy stuff with skis and snowboards. And you can do snowboarding yourself, of course. And then we have angel launches and further educational programs scheduled in January. Yes, and with that, I would love to introduce our interview guests, and we have two of them, as I said. We have Kathrin Wolff Schmandt. She is an angel investor, and we're going to look into how she does it and how she likes it in a second from now. And we have Stephan Thalmann. He's an entrepreneur which turned into an angel investor, and also he will give us his very own perspective. Now with that, I would like to start with my first questions. So Kathrin, tell us about yourself.
Hello, everyone. Thank you for having me. I am Kathrin Wolff. Yeah, I've not been an entrepreneur. I come from the banking world. I was at UBS, an executive director, mainly head of marketing, CMO, business development, and was working basically globally. A lot of times, many years, I had a global role. I was also working in the US for 2 years. I was working in Germany for 2 years, and was responsible for marketing, and mainly it was always involving somehow corporates. So it was always, that was my intrigue and my interest at all the time. And then also financial. I was in my global role, I was financially responsible for the planning and the co-strategy and analytics of of 150 employees and 3 million digit budget, so in 30, spread in 35 countries. So it was very much like globally, and you saw what's happening in the global world.
So you know the numbers game at big corporates.
So right? I know in the financial institutions, right? You're anyway, as a marketing, you need to understand investing. So I was also, after my heading up corporate marketing for the corporates, so I got to know all the startups and corporates of all sizes in Switzerland. And our goal was always to grow corporates. It was not just like, if you think of marketing, people think, oh, you want to sell something. Of course, at the end of the day, you wanted to sell something. But the point was, our idea was, we help you to grow. And we write research reports, we write information that helps you as SMEs to get further. And so I was also then in the strategic boards of the Swiss Economic Forum, for example. I was a founding member of the CEF Growth, it's called now, where as a bank, we realized, well, we're missing out on the ventures, on the startups, because we can give credit only, if they have a 5 years positive revenues. So this is not a startup.
It's a little too late for startups.
That's too late, right? Exactly. So then we got together with Swiss Economic Forum, and then we founded that, and I spearheaded that at UBS, that it could go through, and it still exists and still works. So that's very nice to see. And then I got into wealth management. Wealth management, right? It's also the other situation where I said, okay, you have most of the people who have high net worth and ultra high this is coming from being an entrepreneur. So that was also interesting, and got into the global, young president organization that help startups and help already growth companies. So that was very interesting. So it always somehow involved the corporations. And then in 2018, I got to know Bitcoin better and blockchain and blockchain technology. I was totally excited about that. And I said, this is the future. This is a disruption. This is going to have great opportunities. And then joined 2019 into the chief digital office at UBS, and was there responsible for an art project in blockchain. We wanted to digitize the art markets, and went then out of the UBS and headed up that business plan with a consortium of many people, which is always difficult, right? Business plan was good,
but then company,
lots of stakeholders. Company was not found very quickly. It took years and years. Then I think after 4 years. So then I said, this is an interesting world. I got educated. I got more into the startup world, and started to be an investor. Started to be advisor to startups, a board member. And this is how I got into that sphere and got to know SICTIC, and started then, in 2019, I started to invest. SICTIC, I just joined lately, but looking forward to that.
So you were not born as an investor, right? But you invested already before you came to SICTIC. I will talk later a little bit of why you wanted to join a club and not just do it on your own, because you already knew how to do it, right? Let's maybe first look at Stephan Thalmann. Tell us about what you do and who you are.
Yes, hello everybody. Thanks for having me, Thomas, as well. And I really hope I can give today some insights into angel investing. So as mentioned, my name is Stephan Thalmann. I live with my family in Ilnau-Efretikon, which is basically halfway from Zurich to Winterthur. I'm 45 years old, have a degree in business administration, and I owned and managed 2 industrial companies for about 15 years before I sold them in 2020 to a private equity company. Today, I'm more into the real estate market as a developer and an investor, as well as a business angel. SICTIC, I actually joined about 2 years ago. I would consider myself as being a rather active angel investor. I'm also part of the SICTIC jury. That's where we select the startups that pitch at the various SICTIC events that you mentioned before. So yeah, I guess that's me.
Great. So thanks for presenting yourselves. If the audience has questions at any time, you can use the Q&A button and just enter your questions into the chat window. I'm going to see them, and I'm going to pick some of them during our interview. So I don't need to wait until the very end. Now, of course, investing is fascinating. Now, the question is, how much experience do our candidates have here? So, Kathrin, how many investments have you actually done?
I have 5 angel investments and 1 private equity.
How do you differentiate between what is private equity, what is like startup?
Well, the angel investing startup is really, they're at the beginning, or early stage startup. Let's put it that way. Yeah, early stage startup. And then private equity is a startup that is already in its growth, still a startup, but in its growth phase. And it's one that already started to scale, has many customers, has a journey that you see it's going to be scaling up quite fast.
It's more mature, later stage, I guess.
More mature, later stage.
Less risk that it will not make it.
Yes.
But maybe also less upside, right?
Less upside, yeah. And I understand the one I'm invested in is the one SICTIC invested very early. So I came much later into the round, so I have a much worse deal than you guys have. But it's still really,
I have to take so much risk and wait so long, right?
Yeah, that's right.
We'll see. That one you invest in, I think they want to do an IPO, right? So
I know.
Let's see.
Let's see. In 2 years, I think.
Awesome. Yes, some private equity, for those that are not familiar with the term, basically it's unlisted equities. It's not on a stock market. So the shares are not easily tradable, but definitely a cool thing to look at. And overall, the market of private equity is much larger than the publicly listed companies at the stock market. Yes, Stephan, what about your portfolio?
A total of 8 investments, and the first one actually beginning of last year.
So you didn't shy to invest into many of them in just a very short time frame,
yeah,
right?
I think we'll get to that point. I'm definitely following a portfolio approach here. So yeah.
So maybe Stephan, tell us, how did you actually get interested into angel investing?
That's a good question. Actually, I've always been investing in the past, be it into the stock market or real estate or private equity or whatever. And actually, a few times in the past, I was actually close to invest into a startup too. But in these cases, I was approached by a founder or someone, you know, that knew a founder. I think that would have been called a classic family friend or fool investment, right? But yeah, I like the companies, but I always felt a bit hesitant and unsure whether I would be doing the right thing from an investment perspective. So I ultimately ended up not investing. But I was definitely impressed by the dynamic and the whole startup ecosystem. So yeah, after having sold my companies, I obviously had more time at my disposal, and a friend of mine told me about SICTIC. So I went to one of the events actually in 2020. They were all were fully remote, these events.
Yes,
and,
because of Corona, they were virtual.
Exactly. So yeah, I figured it makes a lot of sense to learn from people who have done such investments before. That's how I became an angel investor.
Great. So basically somebody told you, have a look, and you already knew the topic, but you were not part of a group that did that more systematic, right?
No, not at all.
Great. And Kathrin, I guess you took a different approach, or how did it happen?
Yeah, with a different approach, and it's interesting because it goes back to my studies. I did my MBA and the MBA thesis on the topic, the difference between VCs, venture capital in Switzerland and the US. So when I came back from the US, I studied in the US and I worked in the US. I got just excited. And back then in Switzerland, VC was basically, there was SECA as an organization, and there were some VC companies, but it was just almost not existent, certainly not for private person to invest. So and the reason, and then I wrote my thesis and research and all that, and the big difference is just the risk taking, right, of Switzerland. That it's just, if you failed once, you were done. It's much better now. It still has a little bit that difference, but so that just got totally, I was just totally excited in that. And then you ask, so why did you not choose a VC or, you know, a private equity or whatever career? And I just felt, first of all, I loved marketing. I studied international business, and I felt like I didn't study finance. You have to be so good in number crunching, and I just didn't feel comfortable. It's very interesting to think of that back now, but that was really probably one of the reasons. But I always in my career, as I explained before, that's why I explained that a bit more, it always had to do with companies, and I was interested in growth of companies, and I was curious what they're doing. So but could not, and then as a private person, you could not invest in companies, right? There was just no possibility. And so then once that was possible actually I first got to know another company, etc. And then it was all of a sudden, there's SICTIC, there are other companies where you can start, and I had more time. And Stephan was saying the same thing, and it's so true, because before I just didn't have the time. With family, kids, working full time, it was just no time to look into, because you need to understand the company, you need to learn about the company before you invest. So that's why I started only once I had more time on my hand and could actually look into it.
It definitely helps to have time as an angel investor. We just got the question from Andrea Bertoneri. He wants to know whether when you invest as an angel investor, do you also get the board seat? And then if you get that, do you actually go into the board, or do you not do that? Kathrin, about your portfolio, are you in the board, or are you joining any of the boards? And if so, why?
So it is absolutely not, it's not normal, or it's possible, but it's not normal that you join a board. You don't have to join a board, and you are not, and there's not a clear offer that you can join the board of a company. I have an offer now for 2 companies to join the board, where I think I can bring a lot, right? I mean, that's the prerequisite, that you say, here's my skill. I think I can bring them further, and I very much love to do that. And I'm looking forward. I already am working with both of those companies very intensively. So it's a natural next step, in a sense.
And for you, Stephan, did you ever consider joining a board, or want to do that in the future?
I'm not in the board yet. It's been a topic in the past, definitely. But I would say the same as Kathrin just mentioned. You know, it's obviously not when you invest you get automatically a board seat, right? I mean, usually it's if there's a new round, for example, there's a VC involved, they get the board seat, or the lead investor gets the board seat. But I would say as an average, there's like, I don't know, 3 to 5 board seats on a startup anyway. So it's not that everybody can just automatically join the board. Yeah, it's as Kathrin mentioned, if it makes sense, if I can really support the startup, then yeah, why not? Absolutely.
Great. We got another question from Kilian Ulm. He wants to know what's the average number of investment is per investor in the SICTIC community, and what the average investment sum is per member and year. That's a question I can take. So we're doing statistics. The thing is, we asked our investors with surveys, and some of them come back to us, others do not come back to us. So we don't manage their portfolios. So we're not a wealth manager or intermediary. They invest on their own, and some of them report it to us in detail, others, they don't want to talk about it. So we don't have the exact figures. We often see this, that when people come, for the first year, they mostly learn. They do maybe 1 investment, in the next year, maybe 2, but very rarely you do like 10 investments. So of course, if you have a lot of time and want to minimize the time to get the large portfolio, because in the end, the goal is to have a portfolio of at least 5, better 10 or 15 startups. So you have a good balancing of the risk. You should never invest just in 1 startup, right? And so typically we suggest to 1 or 2 investments a year. That's typically a good pace if you have a full-time job and do this as a hobby. Of course, if you are in a good position that you have a lot of time because you're in between jobs, for example, then we often see that people build up a portfolio very quickly, do 5 or more investments in a year. Average investment, we see most of the ticket sizes, like investment per single investor, between 20,000 and 50,000 per deal. So if they go into 2 deals, it's either 2 times 20 or 2 times 50. And some people, they only invest when they get the bonus. And if they don't get the bonus, then they skip a year. Many of our members, they are not ultra high net worth individuals, but they have quite either good salary or some other way of reshuffling stock stuff into private equity, like less exposure on a stock market and more into private markets. And overall, the round sizes that we see is around 1 million to 1.5 million is the typical round size in total. And often in these round sizes, if they go way above 1 million, we have at least 1 early stage VC joining the angels. So that's about the statistics. You can read all of that actually in our public report on the website. If you go to our website section, just sictic.ch/reports, you're going to download all of them for free. So that's the answer to the statistical question. Now let's look at the difference between investing at the stock market and investing into a Swiss startup. Kathrin, given that you have worked at the bank, maybe you can tell us how you see these 2 different investment possibilities and how they actually compare.
Yeah. So right, at the stock market, I can choose my risk strategy, right? I can say, okay, you know, I go for blue chip stocks, rather secure, or I go for like high risk stock market, or I go just for the blue chips that have good dividends, so value investing. So I can choose basically, and there is always liquidity, right? So it's always liquid. I basically more or less can always sell or buy at any time. And that's, you know, with the angel investing, not at all. Your money is locked, and you know, you have to wait until there is an exit possibility.
So can you tell us a little bit, like if you buy a startup share and you totally think this is the next unicorn or whatever, or great scale up, why is it not possible to sell that share 1 week later? Because you're convinced it's great, right? Why would other people also be convinced and want it from you?
It's not a public marketplace. Basically, I cannot go and offer it on a marketplace. I would have to go to other investors myself and find them and say, hey, are you interested to buy my share? So there's just not a public place where, and
it's a lack of an easy way to find a buyer.
Yes, that's basically it.
But if you know somebody that wants to buy it a year later, you could always sell, right?
Yes, then you can. Yes, absolutely. But it's on your terms, on your own research and searching, you know, for another investor that is interested in, and you have to sell it. So you have to do a lot more. Whereas in the stock exchange, I just go on my computer in e-banking and tack, buy or sell. And so that's much more interesting, right? And then the other one, the other big one difference is the research, right? If I invest in the stock market,
I talk about financial research, I guess, not about other research.
Yeah, yeah, you're
our startups sometimes are spin-offs from research institutions, you know.
True. No, it's financial, right? Financial research. I have research analysts in banks all over the world, right? And then they just provide you insights how they looked at it, and it's totally professionally done. You know, they looked at every number, they compare numbers with competitor industries, and you can be sure that they looked at different angles, not at just one angle. And they make even a suggestion. Okay, I would buy now, I would sell now, I would hold, and give you a price that they reckon that it would be in the future. So you can rely on that very much, actually.
So there's lots of expert opinions.
Expert opinions, exactly right.
Great. Let's maybe move on. We got another question from Ingeborg Gaster-Chris, and she wants to know, do you only invest in startups whose product, business model, and technology you understand? And it says for you, like a killer criteria, if you don't understand it, you don't invest. Stephan, what would you say?
That's a good one, especially for me having a business and business administration background. Honestly, I think you should at least more or less understand the business model of the company. I mean, you don't need to understand, or that's, you know, at least my opinion, you don't need to understand all the details of a business model. You know, you don't need to understand how the code, for example, is being coded in detail. But I personally wouldn't invest into a startup that I don't understand the business model and the market too. I think both are equally important.
Okay, and Kathrin, same for you? Or do you invest also in crazy ideas? You have no clue why they work and what they do?
No, I don't. And in my experience with the blockchain that I told you, right, that I was so interested in, and I thought it was great. I was reading, and there were so many use cases for blockchain, and I was excited and said, wow, this is it. This is the future. But it's a very young industry still, right? It's not mature at all. So I said, I'm not going to invest. I only started investing 2-3 years later into blockchain companies, and 2 of them, and they are still doing well. So I did well so far, and looks good for them. But yeah, you have to. I'm not totally a crazy risk taker, and I want to understand. Another example that I have is my first one was in a pharma. And I'm totally not a pharma person. I have no clue. So I asked the doctor, I said, there's this, what do you think? And is that something that is needed? Do you know that medication? Do you know that there are side effects of the other one? Is that really better? So it just got to my network, and she confirmed, yes, that's good. And then also, this is why I went into somewhere in a field where I don't know much about, but was convinced with the team and the people. And I said, yes, it's going to go.
Yeah, you can also just trust the founders, right? And say, okay,
right.
If they know what they do, maybe that's good enough. I trust the guys, they can do it.
Yeah.
In the end, I think investing in a case where you don't understand how they can make money can be also dangerous, right? I mean, in the end might be just a fraud case and not the real startup. And coming back to that, I mean, how do you actually qualify as an angel investor? Like when do you know that you are an angel investor, and how do you actually become one? Like Kathrin, what's the process to get there? What is exactly an angel investor, if you had to define it?
If I had to define it, it's somebody who invests early on a startup company, believes in the startup, and is able to, or is willing to put money, lock in money for a long time, for at least 5 to 10 years, to believe into the startup, to be curious, to want to shape the future in a sense, almost, to say, hey, this is a breakthrough thing. I believe in it, and I want this to go further. And you're ready to lose the money, right? I mean, as you just said, it's possible that
Well, you take a risk. Yeah.
You take a risk, because startups, there are always so many startups. The majority of startups that are not are actually not succeeding at the end. So you have to be aware of that. So that's what, and on the money wise in SICTIC, right, you have to invest as of 20,000. There are other platforms, Actionariat, where you can start investing with, as low as 1,000. To just, if you say, oh, I'll believe in that company, you can do it. So in a sense, everybody can do it, who is willing to lose or the money, or lock in the money for a while. But I just recommend be aware what it means. That you do have, as we said, you don't need a lot of time. So you can always say, okay, I limit my research, but you do have to take it seriously and be curious and want to change something, maybe.
Yeah, so basically anybody can invest in a startup, sure, but there's still a difference between investing in startups and being an angel investor, right? Maybe Stephan can tell us his definition of the difference between just investing and being an angel investor.
Right. Well, everything that Kathrin's mentioned, I'm absolutely the same opinion there. But difference between, is crowdfunding, for example, angel investing? If I asked you, you would probably say no, it's not angel investing, right? So in my opinion, the angel investor is definitely more in the same boat with the founders than just an ordinary investor. So you try to provide your help. You try to, I mean, we already talked a bit about being on a board or being in an advisory role. We mentioned that term smart money. So that's, I think, where the difference really is between being an angel investor and just making an investment into a startup. So yeah, you're trying to help. You're on the same, sometimes emotional journey with the startup. So that's how I feel about being an angel investor.
So you're very close to the entrepreneurs, right?
Well, not always. I mean, it depends on the founders too, right? I mean, I mentioned that I invested into 8 startups by now. So obviously, even though I'm probably having a bit more time than other people, I'm not, knocking on the founders' doors every day and ask them out for a coffee break or whatever. So it really depends on the startup. So sometimes there might be times where they need more support. They reach out to you. You try to help them, and then there's probably half a year you don't hardly hear anything apart from the newsletter or information they provide on a regular basis to investors, right?
Yeah, and then you can jump in if you can contribute, I guess.
Exactly.
We got a question from Lydia Woodward. She wants to know from Stephan, do you have developed an investment thesis yet or a strategy?
Well, definitely not a thesis. No, not at all. But yeah, I mentioned the portfolio approach. So I'm really trying to de-risk the investments by a portfolio approach. And I probably also have to mention that my startup investments are a rather small part of the whole asset allocation. So in other words, I personally wouldn't put more than 5 to 10% max of my assets into startups. So I mentioned in the beginning, most of my investments go into real estate. I also do stock market whatsoever. So that's probably the investment approach or strategy, but I haven't written a thesis yet, no.
Kathrin, do you have an investment thesis or a strategy?
No, I also don't. I probably would say I have a strategy. Investing like with SICTIC in Swiss companies. There was one, idea, maybe go international, but so far I stick with that. That could be something that I could reach out in the future to look what is internationally out there. And then my strategy is to understand, to know the team, and to invest in something where I see there is a future and it will change the future. I guess that's probably my most strategy, if you want so.
So you like startups which have a big impact on society and everything. The disruptors of the future. Cool.
Maybe Thomas, I can add one more point here to the strategy. I'm only investing into Swiss startups. So all my investments have come through SICTIC in the past. That may not be the case in the future, but it has been in the past. And I don't invest into verticals or into companies from like biotech or health tech, because they just need a lot of money and they go even longer until a potential exit. And I kind of prefer B2B business models.
So those companies which sell to other companies, right?
Yeah, exactly.
Yes, interesting. I guess this thesis will become more clear once you have built up part of your portfolio, and then you might want to see synergies, or you start to understand what you like really and what you don't like, the type of founders that you want to work with, type of business models where you can support. There's lots of different models at which we have seen. There's not one strategy which every angel investor follows. Often it develops over 2-3 years. And then suddenly, oh, this is now a thesis. I mean, some people have very specific criteria, others are very broad. Some people just say, if I like the team, that's good enough. And others say, no, it needs to be in fintech. Otherwise, I don't look at it, because fintech have better exit multiples typically, because the buyers typically have more money than other industries. There's lots of these things, but it doesn't mean that they always work out. In the end, it's also a numbers game. If you only invest in one fintech, that doesn't mean that you will have the home run in the end, right? We got the question about due diligence. Like, how do you check the startups? And do you do that alone? Do you get support from others or from SICTIC? Maybe you can talk about your first startup investments, how it happened there, which you did through SICTIC. Maybe Kathrin, want to tell us about your due diligence journey with the startup?
Okay, the first was the pharma, and that's maybe not typical, but just there I knew through a friend, and I knew the founder very well, and I didn't understand really, the pharma and the sickness and all that, and I just did my due diligence with friends. But I was so convinced with the person that I said, this is it. The next one, I was really completely in the blockchain. I totally knew that business model. I from myself, from doing the business model, the business plan, and so I completely knew this is a great potential. And also looked then at the team, but I did the due diligence like that. And but all, if you want, so by myself. And this is what I very much like at SICTIC, and my first SICTIC investment. It just feels great because you have other investors, and it gives you confidence. And they also look maybe at other things that I look at, It just makes it the decision making easier to also discuss with others. And I think I was doing that before alone, and I think that's something that I'm very much looking forward and already had experience with SICTIC positive.
Yes. So how did it work for you, Stephan, in the due diligence process? Was it easier in a group instead of alone, or?
Oh, absolutely, absolutely. I was just thinking of my first investment roughly 2 years ago, and I was basically just going with the pack. I mean, you know, the typical process is that you have the founders pitching at one of the SICTIC events. Then you, as you mentioned, Thomas, in your intro slides, you have the chance to talk to them after the presentation. If you're interested into the startup, then the next session is going to be the deep dive. So that's an hour virtual. Yeah, they go a bit more into the details of their business model and then team and everything. And if you're still interested, then the due diligence process actually kicks off. And that means for the startup, they have to provide a data room with all the documents that potential investors would like to see. And then usually someone's taking the lead. I think you mentioned that in the beginning too. It's a lead investor. Usually it's a senior business angel. Sometimes it can be an early stage VC, but most of the time, at least in my cases, it was a senior business angel that takes the lead. And that person basically coordinates everything between the founders, between the startup and the potential investors. Usually, I don't know, there's probably in the beginning 10 to 20 potential investors, and the further the case goes, the more drop out, at least typically. And yeah, then you just there's a due diligence checklist. I think SICTIC provides that one on the website as well.
Yeah, so, we also have a handbook which has
right. So according to the strengths and weaknesses, or to the know-how that the investors can provide, you split up the different due diligence tasks. So someone's probably go further into the finance part. Someone's looking at if it's a software, at the coding, or background checks on the founders whatsoever. So that goes on for sometimes several weeks, and then when you have everything together, yeah, that's basically the due diligence process that should lead into a term sheet, and later on into a shareholder agreement, and then the closing of the deal. And
so
again,
basically it's very collaborative, right? A lot of different people look at different
absolutely.
things, and then you get a consolidated opinion on all the risks and opportunities.
Absolutely. And especially if you're, I call it a newbie, like I was like 2 years ago, I was really glad that someone, took the lead and told me what to do or what not to do. So it's a tremendous help, in my opinion.
Can I add here the handbook? You said that on the side, but this is actually how I came across of SICTIC, right? Thomas,
maybe you can show the handbook slide. Let me see. Oh, you have the handbook there. It's a little blurry. Yeah, we have a slide about that. So this is actually for free. If anybody wants to get a quick start, you can download the handbook from angelhandbook.ch as a PDF or read it online. We also had some printed copies, about 5,000 copies, but they're already out of stock because so many people wanted one. But you can now download it and read it over Christmas time. It's 250 pages about all the different topics that you might touch when you want to invest in a Swiss startup. It also includes the due diligence checklist, which we just mentioned, but also other advice on how angels are taxed, or how the business model works, or how to be a good coach, or a bit kind of a good angel investor, or what it means to go into a board in terms of risk and liabilities, or what type of investment instruments that you can use, like besides equity, how does a convertible note work, or how do incentive plans work for employees? A lot of different things. And yeah, most people, they get a really quick start with that. And then they need some deal flow afterwards, of course, to try it out. Yeah, let's go back. to our discussion round. I just saw there was another question about the fee model of SICTIC. It's very simple. We only have a flat fee, a yearly fee for being a member. It's currently 750 Swiss francs plus an onboarding fee of 250. And other than that, we don't have fees. So there's no finder's fee, there's no fee for the lead investor, there's no exit carry, there's no management fees. We are not a VC, we are a matchmaking organization. SICTIC itself is a non-for-profit association based in Switzerland. Our goal is really to create a community of great investors and create a deal flow such that the best founders meet the best investors through our matchmaking systems. So basically you can invest as much or as little as you want, and you don't get extra charges, neither when you invest nor later. So when you put in 20,000 into a startup, 20,000 arrive on the bank account of the startup. And also the startup doesn't have to pay us anything. There's no pitching fees. There's no other fees that they have to pay. They just need to be good enough to earn it to come on stage. So it's a super simple model that we have here. Now, of course, there's lots of questions about how to really do it. And one of the core things is always assessing the founder team. Like how do you check them out? How do you know that this team can do it, right? Maybe Kathrin, how do you assess a founder team?
I look at the founder or the founder team itself, how they are, how passionate. So first of all, very just emotional, like how passionate they are, how sure they are of the product and what they're doing, and how resilient they are to go through thick and thin, right? Go up and down. I mean, for years you have to be sure you're in there for years and you work hard. And then the second one I think is also very key is how are they able to attract talent? Because eventually they have to attract talent. Already, what kind of skills do they have in the team? Did they hire already the skills that they want, or at least sometimes they say, I know we need this skill, I'm looking for it, I don't have it yet, but I know it. So it's already giving me confidence. Okay, they understand what they need as the next step. So that's more like, are they passionate? Are they honest? Are they resilient? And do they have skills, management skills to attract talent? And then skills, of course, for in their field, whatever that is, right? In the technology, and are they skilled enough there?
So there's a lot of different requirements you just mentioned. So they have to be experts, they have to be good in execution, good in hiring, be great team players, and sometimes not all of the founders in the team are on that level. Some of them were super junior, never saw a company from the inside, have never ever hired a single person in life, but now they want to change the world because they have this crazy idea and they just need the money from investors to do it. So Stephan, how do you go about if the team isn't perfect?
Well, first of all, Kathrin's answer was pretty much covered everything that I wanted to mention too, but one aspect I could probably add here is the skin in the game part, and that's exactly where I guess your question's going to, right? What do you do if someone just knocks on your door, presents you a nice business case, and asks for money, right? So for me, it's important that the founders have some skin in the game, meaning that they have worked on their project or on their business idea for quite some time, put into a great effort, and not just go to potential investors and ask for a lot of money.
So you want them to be entrepreneurs taking the risks themselves before they ask investors to go into the risk by giving them money. So not
exactly.
The consultant says, look, I'm going to work for my startup once I have $1 million in the bank. I'm going to switch jobs from McKinsey to the new thing. But it will not start before I get the salary, right? You would not invest in
one I wouldn't invest into.
No, but it's a great idea. Sometimes they might change the world.
Yeah, sometimes not.
Okay, so and going into the risk for you means that they already work on the project for how long? Until before they come to investors?
That totally depends on what kind of startup it is. that there are several aspects. It doesn't necessarily mean that they've been working for 2 years on their project, but when you're in the due diligence process and the first thing you see is that they're already paying high salaries to themselves, then probably something's wrong, right?
Mm-hmm.
So it really depends on the startup, what product or what business model they have. But I think it's rather easy to find out if someone's really in for real, or if someone's just trying to get the money and yeah.
So it should not be a hobby. It should be the next big commitment, right? And it should not be for 1 year.
Exactly.
For how long should it be the commitment? How many years do you expect the startup founder to be committed?
Until the exit. I mean, that's the main purpose. Well, typically, I would say between 7 and 10 years, depending on what stage the startup actually is. But they definitely have to be in for the long run.
Mm-hmm.
Yeah, they have to be committed for the long run, and ultimately, at least in my opinion, if you invest into a startup, the founder have to be aligned in the fact that they have to produce, or the main goal is to produce an exit, right? I mean, all the nice valuations and everything, as an investor, you ultimately want to have your money back with a nice multiple, and that basically means selling the company or taking it public.
Okay, that sounds like commitment from begin to end. I mean, same thing is with investors' money. Once it's in, it's in. You cannot take it out.
Absolutely.
And you have the full risk from the first day because your money is in fully, while the other people work every day, but they invest gradually more and more time. Now, in terms of surprises of doing a first investment round, did you have any surprises, Stephan, when you first did an angel investment?
Well, maybe I was just generally surprised by the high valuation of startup companies. I mean, I've seen these different valuation methods in the past too, but usually applied to companies that have real revenues and assets and everything. And if you see startups for the first time, they probably have an MVP or not even an MVP. And then they're having 5, 6, 7 whatever million valuation. I mean, I had to get used to that, to be honest.
But it's not comparable to how you judge an SME. If you look at profit,
it isn't.
Substance values, it's also not comparable to the tax value that these companies have, because startups typically have no revenues or they have losses.
Exactly.
Then the value would be 0. But
it's all future revenues,
these
right?
Valuations actually make sense. So why could a startup which is just a year old be worth 5 million without any revenues?
Well, it's all based on future revenues. So you expect them to scale up fast and to be taken over by some strategic investor or going public, which rarely happens. But at least in theory, that's what they aim for. And so I think yeah.
Yes, that's basically it. Now, we have about 5 minutes to conclude. If somebody still wants to ask a pressing question, they of course can. Let's maybe quickly talk about returns, because investing is easy. Anybody can put money somewhere. Now, getting money back in an exit is more tricky. And the question is always, what's your expectation here? Like, how much is good enough for the type of investment here? Like, depending on the risk you take, right? So, Kathrin, what's your take on what should be a reasonable return to expect, and when would you expect to get the money back if you invest?
So I have here 2 strategies. I have one is where I have companies that I take a lot of risk, where I see a high return, at least I would say 3x, maybe 5x, hopefully.
So 5 times the money back that you put in.
Yeah, exactly.
Put in 20K, you get 100,000 back.
Yeah. So that's some where I see that totally happening. And then there are some companies that I see myself even staying in the long run, that I don't necessarily see an exit or anything, but see more me taking the dividends eventually, staying in and taking the money as it goes. So support the company longer. Yeah.
So when it becomes profitable, what they don't want to sell, then you would also be happy to take dividends.
Yeah.
It's not the classical VC approach, because VCs have to sell because they shut down their fund. Right. Yeah, and for Stephan, what's your expectation on returns and timeline?
Well, I already mentioned the timeline from 7 to 10 years. Return-wise, I'd say as a rule of thumb, 1 out of 10 startups actually makes an exit, realistically. So the other 9 either go bust or, you know, somehow disappear. So as a conclusion, that 1 startup has basically to cover for the other 9s. So I would say a 10x multiple would be what I'm looking for. It also depends a bit on the stage. I mean, we were talking about, I think in the beginning, about what stage that I think Kathrin mentioned that about that startup she invested to, that, you know, SICTIC community has invested in an earlier round, even pre-seed, and she got in now in a later stage. So obviously it depends on the stage. So if you go in at a later stage, the multiple obviously is smaller than when you go in the first stage.
Yes. So now, given that you know about startup investment, but you're also in a club, like, what would you say is the biggest game changer if you do investments inside an investment club like SICTIC as an angel investor club, instead of doing it on your own?
For me, it's definitely all about learning. It's all about learning. I mean, we were talking about the due diligence process, and honestly, the first due diligence I was part of, people were talking about stuff I just really didn't even understand the term. So I'm glad that that Angel Handbook's out now. I mean, you can also go to the internet and search for these, you know, topics or whatever. But there's a great learning curve when being an angel investor. And in an angel investor club like SICTIC, there's always other people you can talk to. There's and most of them or all of them are really open to talk about their experience, and that's what I really appreciate. So you learn from other investors and hopefully become a better angel investor. I think that's the big difference.
Thanks, Kathrin. Anything to add?
Yeah, I agree everything that Stephan said. Adding on the Learning Science Academy, that you have this webinars as well on the website. I thought that was also great. I watched some of those webinars and was quite impressed to help me. And then the other one is this confidence of decision making. You can discuss with others, and you're more secure to say, yes, this is the right investment. And the other difference is if they invest, or the startup goes to SICTIC, they have to open the books. They have to go through due diligence. They provide the numbers. There are some investments I did, the numbers, I was not sure if the numbers are right, or if the numbers, or didn't even get the numbers. So all this security, that they have to show the numbers, you can be sure it's correct. And they will be screened beforehand even, and only good ones will make it. That gives you just the confidence in decision making, which I think is very key. And to get the network. I wanted to say that it's very interesting to have this network of investors. It's just also not only about investing, but just you can learn, you can understand, you get exposed to different industries and types of people. I appreciate that very much.
That's great. So if somebody thinks about becoming an angel investor, what should be the first step, Kathrin?
What should be the first step? Also, first step is make sure you have money aside that is locked for a long time. So I say now, as family member, you have to think of the kids' education. Maybe you want to buy a house or whatever. So then maybe it's not yet the right time, unless you do it professional like Thomas. But I think that is a big thing. And then you need to have some time to actually help the startup open up and have some knowledge about it, and open up your network, or help, or be ready to help. So you need to have some time. Make sure you have some time It doesn't need with every startup a lot of time, but Thomas, Stephan mentioned that before a bit. But still, you need to be, yeah, that's what you need to have, and ready to lose the money if it's you know. I mean, nobody's ready to lose the money, but I'm saying the risk. Can take the risk.
It's good to be prepared if you lose some of your startups. Yeah. Yes.
Yeah.
I know from Stephan. Any last hints?
Not much to add here. I would just say just go to one of the events, one of the SICTIC Investor Days. I think there's always for a first time. I think you get a free entry there. Just go
ask
there.
A member of SICTIC and they can give you free access. Yeah.
Right. So and people are really nice there. So you don't need to be afraid of just going there by yourself. And yeah, just have a look and feel of what's going on.
Great. And with that, we can maybe bring up the Christmas special last time. And I would like to thank Kathrin, Wolff, Schmandt, and Stephan Thalmann a lot for having answered all the many questions. And I wish everybody a happy holiday season and hope to see some of you at one of our future events. Thanks for joining. And yeah, that's the end of our.
Very welcome. Thanks.
Bye.
Goodbye. Thank you very much.
Bye-bye. See you.
Bye.
Bye. Thanks.